Hello and welcome to the January 26th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Bowley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Well, today we are featuring Bristol Myers Squibb Company, ticker symbol BMY. This is a $48.2 billion healthcare company that engages in the discovery, development, licensing, manufacture, marketing, distribution, and sale of pharmaceuticals and nutritional products worldwide. From a technical perspective, you can see that the stock's been uptrending for quite a while, and you can see that this trend line's been in play. If we take a look at the lows back in early March, again in July, and then again in early November, we definitely have a nice trend line that has developed here that we continue to trade above, which is a good thing. Recently, you can see that there was a lot of accumulation going on in November and December. We actually put in a negative divergence, though, as we reached new highs in mid-December. You can see the higher prices here, but the MACD started dropping. So that was an indication to us that the momentum was starting to slow. We did like the stock, but we wanted to wait to see if we could get the stock down a little bit cheaper and under better technical conditions for a buy. Now, what we've seen here over the last 30 days or so is a recent test of the highs in December, the failure there, and now the drop back. Now, the thing that's interesting, normally I wouldn't be suggesting that we take a look at a stock that just recently broke below its 50-day moving average. But take a look at the volume on this move back down below the 50. It's very, very light compared to what we saw here during this accumulation phase in November and December. So I think the stock looks pretty interesting here, and I believe that as it falls further, or if it falls further, it could be accumulated. So let's call it from the current price down to about $23.50 at the top of this gap support. That would be the area that I would accumulate it. If it were to fall back beneath both the gap support, price support, and this trend line support, and hit, say, 22.75 or so, give it just a little bit of room beneath there, but about 22.75, you might consider using it, that area, as a stop. Now, if I go down here just a little bit further, you can see that Stochastics, which back in November and in December were up in the 80s and 90s for the most part, have fallen all the way back down to single digits. So now, instead of having an overbought stock, we now have an oversold one, certainly making it much better from a potential entry standpoint. Okay, I hope that you've enjoyed this presentation today. We provide this information every day. If you go to investedcentral.com, you can sign up for the Market Pulse newsletter, and we'd be happy to send this chart of the day to you every single day. Happy trading.